Oh my goodness, are you guys ready for a sad story that involves the hedge fund industry? The hedge fund industry, an industry that has over $3 trillion under capital. How much of a bunch of crap hedge funds are? I'm going to explain this to you guys here today, okay? This investor who lost to Warren Buffett on a bet says hedge funds could beat the markets, but it's not their goal. Hedge funds are beating the market for the first time in 10 years, and investor Ted Seeds told CNBC it is possible that they can do so over the next decade because anything can happen in the markets. Last year, Seeds lost a 10-year bet he made with billionaire Warren Buffett that hedge fund performance would top that of the S&P 500. So they couldn't even beat the S&P 500, guys, these hedge fund managers. He took the bait from Buffett when he was founder and president of Prestige Partners, an alternative investment firm that invested in established, small, and select emerging hedge funds. However, Seeds, now managing partner and advisor at Hidden Brook Investments, told CNBC's Leslie Picker on Power Lunch Wednesday that hedge funds are really more focused on delivering an equity-like stream that has a low correlation to the market. Hedge funds really don't try to beat the market, he said. Could it happen? Sure. How might it happen? These type of market conditions, higher rates, more volatility, more trading, all that type of stuff. In fact, these conditions have helped the hedge fund managers in the $3.2 trillion hedge fund industry post a 0.38% gain in April. That brings a total return for the year to 0.39%. The HFRI Fund Weighted Composite Index finished April narrowly ahead of the S&P 500. First time in 10 years, and they barely did better than the S&P 500, guys. I want to expose these hedge funds today because this is such a waste of an industry. Think about this for a second, okay? These guys make hundreds of millions of dollars, sometimes billions of dollars a year, and they can't even beat the S&P 500? Meaning, if the market goes up 8% in a year, they can't even get an 8% return for their clients. And these guys have billions upon billions, if not tens of billions, if not hundreds of billions of dollars under, asset management. These guys can't even beat the markets, and yet people are going with them and giving them their money. Oh, I made all this money from my business or whatever. Here, take this money and invest it for me. And these guys aren't even beating the markets, guys. What they basically do, okay, they come up with some fancy name for their hedge fund, okay? Some fancy name that sounds like so strong and so like manly, Prestige Partners or whatever, just one of those like manly names. They come up with some fancy name, and then they basically go out there and sell. Nothing wrong with that. Everybody needs to sell, right? But they sell that they're such great investors when these guys aren't even beating the market. Okay, they're selling. Oh, you need to come invest with me. Come give me your $100 million that you made from your business. Come give me all this money. I got billions of dollars. And what they do is once they get a bunch of money pooled together that they're already investing, then they use that money as another selling point. Okay, so once they start getting billions of dollars, under management, once they start getting billions, all of a sudden now everybody thinks, oh man, they already got $5 billion under asset management. Wow, they must be great investors. So many people believe in them. Wow, look at the numbers they're doing, okay? And they start using that to their advantage. And when you already have that much money, it's not complicated on how you can make so much money from it, right? Because these guys take 2 and 20, okay? So if you know anything about the hedge fund industry, they take 2 and 20%. Basically meaning they're going to take 2%, whether that fund grows, shrinks, anything, they're taking 2% off the top, okay? So if they got $1 billion under management, they're taking 2% of that year, okay? Regardless of whether they made money, lost money. Then any of the profits they made for that hedge fund, okay? They get 20% of the profits. They get 20% of the profits, guys. That is insane, okay? Think about if they, let's think about last year, okay? A year where the market went up 20-something%. They didn't even have to beat the market. If they just, their clients, they got them, the same amount of gain the S&P went up, or even a little less. Think about it. If they have billions of dollars under management and they get that type of gain, imagine what type of money. And then you can understand very quickly how these guys can make hundreds of millions of dollars or billions of dollars a year. But the fact is, they're not even beating the markets, okay? They're not even making as much money as a market. They had 10 years to do it, and they couldn't even do it, guys, 10 years. The reason Warren Buffett felt comfortable to take this bet is not because he thinks hedge fund managers are stupid or they're all bad investors or anything like that. Warren Buffett took this bet because he understands human psychology, okay? So what these hedge funds do is they don't really, they're not going to care about the percent of gain, because most people out there, even the wealthier people, they don't really understand, this guy should be beating the market or something. They just understand that they need to put their money somewhere that hopefully that money can grow, okay, over time, not even knowing the markets goes up, somewhere around 8% a year. So they got this fancy name, they got, all this money already under management, they got this super nice office, all these secretaries and whatnot. It looks like, super legit, and obviously, a ton of people already invested them, and it's just easier and easier to get people through the door. People don't realize these guys aren't even doing anything special for you. You could just be in an index fund. And guess what? A lot of index funds, they're not even going to take that percent out of you, okay? These guys are taking so much of the money to even, let's say they get a return of 7% a year. They take 2% every batch around. You're getting way less than that. Never mind all the other fees on top of it, guys. It's absolutely insane, but it's so easy for them to do it. Now back to the point on why Warren Buffett felt comfortable making this bet. The reason being is these hedge fund managers, they're just trying not to turn off clients, all right? They're just trying not to turn off clients. Their job is just to attract more clients, more money, pool more money together, because once again, they're getting 2% of however much money. So the more money you got in there, the more money you're getting as a hedge fund manager, right? So their job is just to pool money together. So they don't want to screw up real bad. So they never take any risk out there, okay? They never really take any real risk. They never invest big in a company. If a company starts to sell off, what do they end up doing? They end up selling that stock. Their investing strategy is a losing strategy. It's a losing strategy, which is why they can't even beat the markets, okay? It's a losing strategy. That whole strategy of, let me buy a stock, it's starting to sell off, let me sell it, and let me, buy this other one that's going up right now. That's a losing investment strategy, okay? That does not make money over time. A business decision is not, my stock fell 3% today, I want to sell that stock. That's not a business decision. That's a gambling decision, okay? That's not a business decision. A business decision would be, this company's revenues are now going down. I don't want to be in it because the revenues are going down, or this is going down, or the exit of this business I didn't want them to be in, or something like that. Or something bad happened, okay? Or the CEO left the company. I don't want to be in this position. Those are business decisions. Whether the stock price went up a few percent, down a few percent, you didn't move at all, that has nothing to do with what a decision-making process should be. It's a losing strategy, but that's what these guys are doing, okay? And that's why they can't even beat the markets, because they're just trying not to turn off tons of people, okay? So they're trying not to get in a stock that, let's say they believe in the stock a lot over the long term, but Wall Street's kind of not in favor with it. They don't really want to invest in that stock, because if that stock drops, let's say 20, 30%, and all of a sudden their customers start looking at them and they're like, whoa, that stock's down 20, 30% and you got a lot of our money in that. What are you doing? They can't do that, guys. They can't do that, because it could potentially turn off clients, and if they turn off those clients, then this money starts to go down and down and down, because these people don't even really care about the percent of return they get. They just care that, hopefully they make some money over time and their money's safe there. It's such a bunch of crap, guys. People should realize, just invest in index funds or something like that at that point in time, guys. It's crazy to be giving these hedge fund managers all this money to manage, $3.2 trillion. And these guys can't even beat the markets. What's their utility? What's their utility? You're just making them super rich. They're not doing anything for you. They're certainly not doing anything special for you out there, okay? I'm like, my goodness, guys, it's absolutely insane, but that's just what it goes on. They don't want to take risks. They don't want to do this or do that. They're just trying to, stay in line, trying to, be as good as the guy next to them in the hedge fund across the next big building in New York City, right? They're just trying to do as good as that guy in those windows over there, or somewhere near that. That's all. Whether they get 20% return, 10% return or 5% return, they're kind of looking at it as, doesn't really matter to us. It doesn't really matter to us. We just need to pool more money together, guys. It's just craziness. So it was an easy bet for Warren Buffett to win, but it really exposes the hedge fund industry. These guys had 10 years, couldn't even beat the market. Couldn't even beat the market. We're not even talking about way outperform it. They couldn't even beat it, guys. So anyways, I hope you enjoyed this. Let me know what your opinion is down there in the comments section, as always, about hedge funds and whatnot. I would love to know your guys' opinion on that. Make sure you follow me on Instagram if you have not already. I'm going to start going live on there at least like once every couple weeks and whatnot. So taking live Q&A and doing those type of things. So anyways, thank you for watching and have a great day.